Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA. We'll look at various time frames, and we'll also take a look at market cipher. So I just want to start by looking at the big picture here. This is Bitcoin over the last 10 years, and just looking at where we are in the cycle here. As mentioned in previous videos, I think the current cycle here coming out of the bear market is quite similar to the cycle here 2014 to 15, 16, 17. And I do think we're in a similar position to what's circled here. This picture was from back at the end of May, but pretty much we did go up a bit and sideways here. So pretty much at the edge of this circle. And I think we're in a similar spot to this previous cycle near the edge of this circle, where we did spend quite a lot of time going sideways in this range. So let's just look at this comparison in a bit more detail. This is the area that we were talking about, and we think we're doing a similar thing with our current price action coming off that bear market low. So just looking at that previous cycle, this was 2015 here, 2016 and 2017 bull run. We can see we spent a lot of time consolidating at the lows here. Once we broke this area of resistance, we had that big move to the upside. And just zooming in, we can see we had quite a big correction here. This was actually a 40% correction on this dump here. We're on the 3-day time frame, so this was over about 9 days. We can see we pushed back to the upside, spent some time going sideways, had another correction, spent time going sideways, pretty much up and down in this range. But we noticed we made higher lows here, and we ended up forming basically this ascending triangle pattern. And I think we're doing a similar thing with our current cycle coming out of that bear market low. We saw one big correction here and then several smaller corrections, but we condensed in the range, forming this ascending triangle. And this actually lasted for 197 days before we saw that breakout above resistance. So just looking at our current cycle, obviously we put in the bear market low here. We had quite a big correction here and also a more prolonged correction here. And we have pushed back up to a similar resistance level, similar to what we looked at in that other cycle. And ever since reaching this 31K top here, back on the 10th of April, we have now spent about 100 days in this range, unable to clearly break above that 31K area. We see all the weeks where we have been getting pushed back down. Basically, I think we could do a similar thing here with some sort of ascending triangle pattern. Also just draw it like this to make it a bit more clearer. But this was the first touch point. This was the low. Now we have come back up to the range highs, and we may just end up zigzagging up and down here in this triangle pattern until we do see that breakout. And if we do measure the distance here from the time where we reach that 31K, we have been in this range for about 102 days. And obviously, if we went all the way across here to the edge of this triangle, that would be about 180 days. And we noticed with that previous cycle, it was about 200 days in that range. If we go to our current cycle now, this triangle pattern would end around the middle of October. It doesn't have to be the same here. For this pattern to really be confirmed, we would need another touch point down here on this trend line. You can see we've had 2 touches on the top, but only 1 on the bottom. So obviously we need to confirm this pattern with 2 touches on either side. If we were to come down here and get a bounce, it would confirm to me that we are in an ascending triangle pattern like that previous cycle, and we most likely will just squeeze until we see that breakout above 31K. And if we were to look at some fib levels here where we may pull back to, if we do see that pullback, again, it doesn't have to happen. We could just go sideways here in the range and then see a breakout. If we are going to do something similar to that previous cycle and get that second pullback with a higher low, this is probably the area I would be looking at when looking at fib levels. If we do take the Fibonacci from this low to our high, we do see the 382 fib here. And if we take it from this low to the high, we get the golden pocket. We do see confluence between those two, and we know that's important when we see fibs line up like this. And there is actually a 2-week order block here in the blue. I will switch to the 2-week after this. We are currently on the 3-day just so we can see this a bit better. But if we were to pull back here to this range, perhaps this could happen sometimes at the start of August. Here it has us around the 2nd of August. and this area would be at about 27.2k. If we just switch quickly to the 2-week time frame, we can see this order block here comes from this green candle in a downtrend. That's also in line with these fib levels. And just switching to the weekly time frame, we can pull up the EMA ribbon that we have been watching. We can see it wouldn't break the EMA ribbon, as mentioned in bull markets. Once we get above the weekly EMA ribbon and it flips with this yellow smaller moving average moving above these larger moving averages, generally on pullbacks we get support of that ribbon, and that happens all the way up in the bull market. But by the time we get to the start of August here, this ribbon will still be in that zone, and we could come into it and get support again as we do condense in this range. And just to quickly show you that, we have showed it on previous videos. We can see here in this bull market, coming out of the lows in 2015, we had that big move to the upside and then a pullback. The ribbon flipped, the yellow moving average is at the top, and we saw on these pullbacks, it did act as support, and eventually we had that next move to the upside. And we saw this all the way up in the bull market. The pullbacks came to that EMA ribbon, and we got bounces all the way up to the bull market top. And let's stick with this weekly time frame here now. We have been looking at this trend line connecting these two highs. We showed it acted as resistance here for several weeks. Once we broke it, we saw that breakout to the upside. But we can also look at this trend line on the log scale. So we are on the regular scale. We can also look at it on the log scale, and log scale is still relevant. It's more useful when we look at more macro analysis. So over several years here, I wouldn't use it for this trend line down the bottom as it's more short term, but I will switch to the log scale and we'll see how it changes this trend line. Again, ignore this lower one because it's not over a macro range, even though it will change with the log scale. So we switch to the log scale and we see how that trend line changes. And again, this is relevant on macro analysis. But what we can see is by changing this, we haven't actually broken this trend line yet on the log scale. And perhaps this is going to be the area of resistance. We can see we are quite close to it, and we could just end up squeezing in this triangle pattern and eventually look to break this trend line on the log scale connecting these two highs. So just something else to watch there. But let's look at some of the weekly order blocks here. Again, we've got that trend line drawn in. We're back on the regular scale for the time being. Just looking at the weekly scale order blocks, we do have one from this green candle in a downtrend. We can see how it has acted as support so far on these pullbacks. I think if we can close a weekly below this order block, then it's more likely that we see a pullback, possibly to these targets down here. I think this would be the lowest we would go at 27.2, and we might not even go that low, but somewhere around this range. And again, we'd have to close a weekly candle below 29,460. Just looking at where we're also getting resistance here, our top was at 31.8k. This is actually the 0.5 fib level, taking it from the top of this dead cat bounce to the bear market low. So this is a key level here, and this is where we're getting resistance, the middle of this range. The other thing we have pulled up here is the 21-week exponential moving average. We did look at that EMA ribbon. Basically, with the EMA ribbon, the yellow line here is the 20-week exponential moving average. So just to simplify the chart, we can just look at the 21-week exponential moving average, which is pretty much the same as the 20. This is one that is commonly used, either the 20 or the 21. But it does clean up the chart a bit, and this is basically the top of the EMA ribbon. You can see when we pulled back into it, we wicked below, but we closed the weekly candles above it, also on this occasion. And again, just like we showed with that EMA ribbon, you can just use the 21-week EMA as a rough guide. We can see during the bull market 2015, 16, 17, that on these pullbacks, we pretty much came to that 21-week EMA ribbon, and we wicked a bit lower here, but again, we didn't close any candle bodies below it, and this was the level that we bounced off on all the pullbacks. So just putting those things together, we could come down here to that 21-week exponential moving average. Perhaps we wick down to these lower areas at 27.2. Perhaps we just get a bounce off this order block here. There is another weekly order block at 28k from that red candle in an uptrend. This will be a zone I'd be interested in getting along if we do start closing weekly candles below this order block, below 29,460. We do also notice the 200-week moving average in red here is also in line with this zone. So I think at worst case scenario on a pullback, this is the area we would get a bounce off that 200-week moving average, the 21-week EMA, and the confluence of fibs here, and also this trend line connecting at the lows. But let's switch down to the daily time frame now. These blue dotted lines are just a measured move target that we're looking to hit eventually at 36K. This was an AB equals CD pattern, but we have already talked about that. Just looking on the daily now over this price range, we've spent about 30 days in this price range here. And what I notice is we did have triple bearish divergence here. So we can see we made higher highs 3 times here while making lower highs on the RSI. So we did have triple bearish divergence here, and we have seen this correction come back down. We could have undone that if we could have got continuation after this pump to 31.8, but we did see quite a big red candle after that, and we did get pushed down. So this bearish divergence is playing out now, and it does seem more likely that perhaps we do need a quick flush out down here before we can get some momentum to push us and break through that 31K, 31.5K resistance area. We were also watching the RSI here. We did notice this pattern just connecting the lows and the highs here, and we had that breakout. That was also the breakout here. And then we were thinking maybe we need to come back to retest this trend line for support. And as we can see with the last daily candle close, we did actually close back inside this triangle pattern. So it hasn't acted as support for the time being. If we can get back above it and see a quick move to the upside, then perhaps you could still see this as support. But for the time being, we are below it. And so that does add to a bit more of a bearish outcome here and possibly that pullback further down. And just looking at the VPVR now, with the amount of volume traded at certain price levels, we see the most amount of volume was traded here at 30.3K. We are currently below that area. We do see a bit of a drop off here where there wasn't much volume. We could possibly see a quick drop down to this next area where volume support might kick in, and that would be at about 28.6K all the way down to about 26.7K. And this is the range where we're looking at the worst possible outcome on a correction. Again, we could just come down to maybe this area at 28K and see a bounce. But again, we have to let it play out. I want to see that weekly close below that weekly order block. And there are some daily order blocks that I need to see us close below to get more confidence that we are going to see more of a correction here. We can look at the daily EMA ribbon. We can see we have started to come into this ribbon. At the bottom of the ribbons is at 29.2K approximately. And I was expecting this ribbon to hold on the first pullback here after breaking it. Generally, we do see that. For example, on this occasion here, we break above the daily EMA ribbon. On a pullback, we did get support, and then we did make a higher high. So generally on that first pullback, the ribbon does act as support. We can also see it here. We pretty much just touched it there, and then we did get one more push higher. So I was expecting a similar thing to happen here. So perhaps we could get support of this ribbon, again, going all the way down to 29.2K, and then we may see a push to the upside, and then we might see that correction. But again, we have to wait for daily candles to close below this ribbon, below 29.2, to give more confidence that perhaps we're going to correct all the way back down. And these are the order blocks I've been speaking about on the daily time frame. You can see there are quite a few order blocks here, especially in the range where we currently are. The lighter the blue color here means there are order blocks overlapping each other, and this generally means stronger support or resistance. At the moment, we're coming back into it, so this would mean stronger support. We can see we wicked below a couple of times here, but we're still closing the daily candles inside this group of order blocks. The bottom of these order blocks is at 29,790. So again, looking to close daily candles below these order blocks, and also that daily EMA ribbon as a second confirmation for a bigger move to the downside. And just looking further down, we do see the next area where we see overlapping order blocks, besides this thin area at 28K, is down here near these fib levels we spoke about, down at about 27.2K. We have to let it play out, really. We are still getting support on these attempts to push down, and there is really no clear direction here until we reach certain levels that validate a more likely move in one or the other direction. And over to market cipher now. This is the 4-hour time frame. This is the range we've been in for about 30 days. We can see we did get this major green dot here on the 4-hour, and on these previous occasions where we have gotten these major green dots, again where the blue wave comes below these white lines, we have seen a bounce from this one. This one pretty much went sideways. This one was the bottom, but the higher term time frames are definitely more reliable. But quite often we do see a bounce from these major 4-hour green dots. We do notice if we just end up going sideways after one of them, it generally indicates we might see another drop. We saw that here, and also with this one here, we just went sideways, we saw another drop. So if we just end up going sideways here, then we most likely will see another drop down. However, if we can get a bit of a bounce here, then perhaps this could be the temporary bottom. The 6-hour also had a green dot that was just confirmed, but again, the higher term time frames will be more reliable. And the 12-hour has corrected down. We do have a green dot. It won't be confirmed till the start of tomorrow. But we saw the last green dot here below this 0 line. We did see a decent bounce from 30.2K to 31.8K. But if we look at the daily time frame here, the blue wave is still coming down here. And I think the daily will be more reliable with a green dot than that 12-hour. And it looks like this has a few more days before we may see that. So I wouldn't place a lot on that 12-hour green dot. The 2-day time frame had that red dot confirmed on Sunday, and this blue wave starting to come down. So the 2-day does look quite bearish. The 3-day also had a red dot confirmed on Tuesday, and the 4-day has a red dot that won't be confirmed till tomorrow's open, but looks likely to be confirmed. So we are seeing bearish signs on the 2-day, 3-day, and the 4-day time frame. While the 12-hour does have a green dot, but the daily doesn't yet. The 5-day doesn't have a red dot present yet, but the next candle is on tomorrow's open. And the 6-day also doesn't have a red dot. The next candle is at the start of next week. And the weekly also doesn't have a red dot. We can see it's getting quite close here. So there are some signs of more bearishness. Weekly doesn't have the red dot yet, so we do need to see that and it get confirmed before it is a bearish signal. I think that's about all for today. Hope you enjoyed that analysis. Again, we did look at this possible ascending triangle pattern similar to the previous cycle, where I think we are in a similar location in the cycle, and that did last for a couple of 100 days, 200 days in fact. So we could end up spending time in this triangle pattern all the way up until near the start of October. Just to be aware of that, on a pullback, we could possibly come back to this area where there are confluence of fibs at 27.2 to 27.5 area, also the bottom of this trend line. And to completely confirm that, we would need to start closing daily candles below the daily EMA ribbon, below 29,180. And an earlier warning sign would be closing at daily candles below this group of order blocks, and that's below 29,800. But I think that's about all. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.